now to decode the market setup, we are joined by Vinit Bolinjkar, HOR Ventura Securities. Hello, welcome to the show, Vinit.
Thank you for having me.
Yes. So, Vinit, I'd like to understand that Indian markets have just logged their worst week in nearly 8 months, with Nifty down 5.5% from its all-time high a year ago. And there's also an overhang due to the tariff issue as well. So, how are you viewing it, and what's the sentiment like?
So, obviously the sentiment is quite negative with Trump announcing some kind of a hammer and tongue approach whenever India is negotiating with them. And this time, the tariffs which have been levied on pharma and other, merchandise exports is suggesting that, things are going to get only difficult and the tariff negotiations or the tariff deal is not going through at all. So given that, I think, India did a good bit to, change the GST, get the GST reforms in place. We saw a rally happen. And now again, we are seeing that, new fresh tariffs are impacting the sentiment. And especially the services sector, which is your H1B, and as we said, the other sectors that are coming up. So, we expect things to remain as such until India is able to, diversify its base away from the US. Second thing is valuations are quite rich. A lot of people say that the valuations have come off, but in my opinion, the valuations still remain quite expensive compared to the rest of the world. And therefore, there could be some more selling that happens in the Q4 as we go into it.
Right, Vinit. And also, rightly pointed out at a time when the government is actually rolling out packages for the exporters and also a GST boost to actually ease the consumption. So you think that we are going to tackle this pressure, of tariffs and other geopolitical issues with these, GST boost and export packages?
So, the FTAs that have been put in place are very meaningful and, our exposure to the global trade and that also with US is not that big, right? So I believe that over a period of 5 to 6 months, it can, stabilize and we would reach a point where, it would make no difference to us. Additionally, I expect the government to put in a lot of more reciprocal action against the US, which will force them to come to the negotiating table. One thing we have to understand is the actions that Trump is taking is he's trying to get a deal out of India, and his geopolitical situation is not very encouraging, and he's desperate for a win. So I think the barrage will continue until it comes to a choke point where the US will give in. So while the predictions are a little gloomy, I am quite optimistic that over the next 2 to 3 months, we will see a lot of rapprochement and post Diwali or going into the end of the year, we will see some kind of positive light at the end of the tunnel.
There's light at the end of the tunnel there. And also, talking about the sectors now. So pharma sector has taken a big hit on the tariffs news, and also, IT sector is under pressure over H1B visa issue. So which sectors are favorable according to you and, from a buying perspective? Also, do you view it as a buy on dips opportunity for the pharma and IT space?
Actually, I wouldn't want to sound doomsday, but I think it's best to avoid these sectors at least for now, because pharma tariffs are going to come in a number of phases. Right now, you have got the branded products. Later, it is going to be other products, and the scale of tariffs will also keep going up, rendering your exports absolutely unviable. And in the meantime, we will have to have the pharma sector companies diversify their export base. And what is the issue with both IT and pharma is that they're very heavily skewed towards the US. So the impact in Q4 is going to be very high on both these sectors. And then we will see much more cuts come off here. So understanding this, I think, if you were to look at the GST budgets that have been announced and the kind of offtake that will happen post that, I think it is important to focus on domestic themes, and you can rely on the energy space, electrification, infrastructure. These are some of the themes that are going to play out very strongly. The related sectors to pharma and IT exports, which one should avoid, are going to be real estate to a large extent.
Okay, so those are some real, good pool of suggestion there, the sectors that one should be eyeing at. So also, Vineet, which companies are you bullish on at a time when markets are, witnessing weakness and stock picking becomes very crucial at this point?
Yeah, so I think the Adani type of stocks which are infrastructure focused and have got their act together and the Hindenburg issues out of concern, I think that the entire pack of Adani packs have got a lot of fair value uh, available to you, and the valuations are also quite benign. So I think that as a large cap focus, one can look to buy into. Other sectors which we like is infrastructure related cement, which should do well. Within power, we like, as we mentioned, Adani stocks. Other stocks that we like are tariff. We also like NHPC because NHPC has got projects in Punjab and Arunachal, and both these are focus area for the government from national security point of view and the Indus Valley fall off. So we'll see acceleration of projects in this space. And NHPC's got most of the projects, so we'll see some encouraging action. There the dividend yield is very good. And over the next 7, 8 years, we're going to see their asset base go up almost 7 times. So that's a very, very good low value pick that emerges. Apart from this, if you see the consumption space, you can look at a stock which is an export oriented theme, that is Manorama Industries. This management actually deals in cocoa butter equivalent, and the differential between cocoa butter equivalent and the actual cocoa is almost more than 100%, and this has been of a long term duration, and this company is operating at very high utilizations, has got good margins, and their capacity build out over the next few years is going to be very, very strong. It is going to multiply a couple of times, and hence we are quite bullish on this company. Apart from this, if you were to look at other sectors, I think we should look at retail plays because last quarter the retail sector has all the companies have sounded out good growth going ahead, and if you couple up with the macro themes like interest rate cut, the income tax benefits, and the GST, I think this thing should play out very well. And additionally, we can also look at auto industry. Maruti is very, very strongly recommended. And we also like the auto and space because auto industry is going to boom. And so the auto anks will also deliver along with that.
Okay, so that's a big basket of stocks, for our viewers who are watching us right away. And also, Vineet, lastly, what are you expecting on Monday when the market really opens? So do you think that the weakness is going to persist? And what advice you have for our investors out there?
So I think, the weakness has kind of started flowing out, and we are going to see some record IPOs which are going to come in the market, very, very large IPOs, and they're going to compete for funds against FIs selling, stagnant flows from the DIIs, and that will pressure the secondary markets. So expect the downtrend to gather further steam, and hence our view is to be very careful, nibble at the stocks that we told you, and investors would do well to pair holdings in pharma and IT and allocate to domestic themes.
Okay, okay. Thank you so much for that. And thank you, Vineet, for being there with us and, sharing those insights with our viewers. Thank you so much.